Welcome everyone. So basically what we're going to be looking at today is pretty much the same as always. We're going to revise the analysis we've done last week. So just starting with USD index, so US dollar index. I've talked about, like last Tuesday we were here and I was like, okay, if we get a pullback, that what I was expecting, if we get a pullback somewhere here, then the market would 100%, correcting itself, and then we could get a up move. Well, we did it up, have the pullback around this level, but the thing was that it wasn't right now. But we did. We went up and then we corrected and then we went up again. So I'm going to consider this a win for us, as we knew the direction of the market and the market was pretty solid there. My next target now is 108. So 108. Yep, 108 would be my next target. Where would it retrace? That's a good question because we're not having any formations like we did before. What we can see on the 15-minute chart is that we have a little formation on here. So if we grab a retest to this area, maybe we can continue to go up. So maybe we can come down to this area, right? And then we can continue to go up. I don't see other direction as, a pullback and then a continuation to go up. A lot of people are expecting the US dollar. It's like, oh my God, no, it's so high. It has to pull back. It has to do that. It has to be this. Why? Just tell me why. You don't know, right? Why you're talking that. Exactly. So there's no reason why the market has to pull back or the market has to do that. There are a few reasons like profit taking and all of the things I've teach you guys already. But the main reason is the macro, and the macro doesn't allow us to trade short positions on US dollar index right now, as we having like ISM, manufacturing and services this week. We already had this morning for us in Australia. I think it felt like, if I'm not wrong, it was like 2 a.m. or 4 a.m. in the morning, something like that. We had the US Fed speaker, Jeremy Powell, and then we had as well, it was 1 a.m. 1 a.m. We had the ISM manufacturing PMI for September. And if we look at the consensus, it was expected to be 48.9 and 47.7, sorry, and it actually came at 49, so much better than expected, right? So again, why would you go against the bigger macro picture? Don't you want to trade with the trend? So there you have it. The trend is we are going up, so why should we catch pullbacks, right? So if you have any strategy, that's yours. But yeah, so pretty much here I would expect something around this level, and then we could continuation to go up all the way to 108, right? So yeah, I'm gonna call this a win for us. We did have the direction right. Other one I was talking, which one I was talking? I don't know if I've mentioned US dollar JPY, probably not. I've mentioned what else? Oh, here, euro dollar. So euro dollar, I was expecting to go a little bit up, all right, inside of this box, but we didn't have this movement up, right? So pretty straightforward this move, to be honest. We did have this, a bit of an up here. I was expecting a little bit more, right? I was expecting at least to touch on this level here, somewhere around here. Let me take my pencil just a moment. I was expecting somewhere around this level, but we didn't have anything, right? So the market just consolidates again and then bottom down and consolidates again, come back, and then we had the touch. But then it was too late already because I wasn't expecting here. I was expecting here, right, to do that. But anyways, the direction was right. And we did had a massive drop to 105. And we had a massive drop to 105.8. That was the targets I've been mentioning already a couple of months. So what I'm expecting now, you guys are going to see in a few minutes. So, and then I had CHFJPY as well. I've mentioned that if we can grab a pullback somewhere around those levels, would be good to, you know, short this market, as in my opinion, we are having a switch of trend in the CHFJPY, not because it breaks down here or go up there. No, it's because CHF, we did had CPI just now. We had it lower than expected, right? And then we had last week or 2 weeks ago, I can't remember now. It wasn't last week, I think it was 2 weeks ago. We had the SNB, the Swiss National Bank, coming and pausing the rates again. They did not raise, they did not cut, they paused the rates, and that is implicating that, you know, where the money that was going to CHF to fund this uptrend here is going now, right? There's one only, oh, it's going for gold. Well, it's not, right? It's not going for gold. Where is it going for? US, right? It's going for US. So it's not much secret that the CHFJPY may be on those last minutes of a hero, let's say. Okay, so that would be it. Let me check USDCAD. Oh yeah, I've mentioned about USDCAD that I wouldn't like to take shorts on here. I would prefer to take longs on USDCAD. CAD-JPY, did I mention something? Let me check. Oh yeah, I mentioned that I was expecting something to come back on these levels. USD, CHF, AUDUSD, of course. There he is. There he is. Jesus Christ, after how many times, man? I've mentioned this trade already, let's say 5-6 times, that would be good to position ourselves on short positions on this range and target 0.62. There he is. That's lovely. NZDUSD, same thing, positioning ourselves on short positions on this range. And then gold, someone talked to me about the gold, and I've mentioned that the gold would come and hit those levels that it is right now. Okay, so there he is as well. What else? I can't remember if I've talked about the USDJPY. Not too sure. GBPCAD, yes, I've mentioned about it, about this short, and that was it. And EURCAD. Did I mention about EURCAD? I think I did. I mentioned about EURCAD. Yeah. So, yeah, guys, that was pretty much it from last week. So I guess we can start the week ahead now. So let me delete this one. So this one can leave it here already. All right, let's start with US dollar. Does anyone have any questions before we start? No? Oh, good. Okay. Not a problem, Robbie. It's my pleasure to have you here, man. I hope you enjoy. All right, so let's talk about US dollar first. So there's a bit of a divergence between the US and other major economies right now, and this is mainly the key driver of the dollar strength that we're having. On the past couple of weeks. The US economy is still growing, doesn't get me wrong, but it is on a slower pace than it was before, okay? While other economies are facing more significant challenges, And then this is leading to an increased demand for the US assets, including the dollar itself, right? So it can be bonds, it can be treasuries, it can be higher yields that those bonds and treasuries are paying. But, you know, itself, the dollar, it is a national widespread reserve. Even China holds its reserves on US dollar. Okay, so it doesn't matter about the BRICS, that the BRICS will make a lot of transactions. In the end, it will always benefit the US dollar. So the week, there's a few of big events this week happening. So we did have the PMI release. We did have the poll speech, and the employment data will come this week. So I'm going to be closely watching the NFP, right? That it's Friday. So for those who don't know, NFP is always on first Friday of the month. However, even if those events disappoint us, so if it comes less than expected, or if it comes lower than the market was priced in, I believe the dollar will remain supported, right, by the economic divergence that is the risk-off narrative that everyone talks about. The US dollar is, there are a concept, I don't know if you guys know, it's called the US dollar is mile, all right? Lots of institutions talk about that. So it's a concept that suggests that the dollar tends to outperform other currencies in both risk-on and risk-off environments. That's because the dollar is seen as a safe haven asset that I've just mentioned for you guys, as well as nationwide spread backup currency. When the risk appetite is high, investors, they tend to buy currencies that are expected to benefit from global economic growth, and that it's the euro, the British pound, and the US dollar. No, sorry, that's the euro and the British pound, right? However, when the risk appetite is low, investors tend to buy safe haven currencies as the dollar and the Japanese yen, right? So what is the market sentiment right now? That is a risk off. So we are basically on a low risk market, and then those people on the market, those investors, they are tending to buy more US dollars. So even if those data disappoint us, that it's not disappointing. Well, we had the PMI release that I've just mentioned for you guys. We had the poll speech this morning as well. It wasn't bad. So now we have to see that the NFP coming on Friday. So yeah, that would be my take. So the recent rise on the US Treasury yields is also supporting the dollar, because more people are willing to grab those US green notes. Higher yields make the US assets much more attractive to foreign investors, which in turn boosts the demand for the dollar. All right, that's for sure. And as I've mentioned on the beginning of our conversation, it's likely, you know, the US is likely to continue to rise in the near term. I'm expecting, as I've mentioned for you guys, to see the DXY, the dollar index, to reach 108, so 108 here within the next few weeks, right? So we may have a bit pullback here, but the trend is continuation to go up. Even if we have the NFP, I wouldn't say that. However, it's important that we have a lot of data on our hands. We look carefully to the market this week. All right, so just pay attention, just pay close attention there. There are some risks in the outlook that I would like to mention for you guys. So for example, if the US economy were to weaken like significantly, very fast and rapidly, this could lead to a decline in the dollar, right? And additionally, if any other central bank tries to raise interest rates or tries to be much more hawkish than the Fed, then yes, this could also weigh on the dollar. So overall, I do believe the dollar is a bullish asset, but just bear in mind these things that I've just mentioned for you guys. So for myself, I would continue to look for long on the US dollar. I wouldn't touch USDJPY as we've just hit our target. So it's too close to the target. So I won't touch USDJPY, but you already know. GBPUSD, nice trade, right? 118. I was just looking at a few friends from Barclays, Bank of America as well, and JP Morgan. They are all looking to the 118 target. I know it sounds crazy, right? It's like 2,000 points. So it's actually 270 pips. But it is a good trade if we can get some opportunities on the entry, because up to now we don't have anything. We just like, and that's not what I'm expecting. I'm expecting something like maybe a pullback to this area, maybe something like that, and then yes, we may continue to go down to the way I've mentioned for you guys, to 118. Okay, euro dollar. Look, I've seen some, I was talking to some dudes from Bank of America as well. It's pretty crazy what they say to me, but like they're looking at 94. I don't think that it goes that low. All right, I don't think it goes that low. Not because the bank say that we're gonna do it. So I don't think it's gonna go that low. What I think it's gonna happen, it's parity. All right, so one, or yeah, one. Oopsie, sorry, that's 50 minutes. One, I think it's okay. There's a lot of orders. One, I think it's okay. We may get this down. All right, but it is again a very big target that I wouldn't trust much. That's what I would say, because my main target was hit already. That's the 105 that I've been mentioned so many times. So I guess now we just go 100 points, 100 pips by 100 pips. So next one more certainly would be the 104, and then 103, and then 102, and then 101, and then 1, right? But again, I still bearish on the euro dollar. Okay, EURCAD, no. Audcad, GBPsd, euro talk to. USDCAD, yeah. My target, my main target was already hit. That was a 137. I don't know if you guys know, but we have a app, not an app, a website that it's a sister company from ACY Securities, that it's called FinLogix. I'm going to show this for you guys just a moment. I've been mentioned already a few times. So if you type FinLogix, that's when you're going to get to this side. And then you can type, let's say, USDCAD. And then you click here. And then it's just a bit slow. And then we can have the ideas, right? So I had a long idea. This guy had a short idea. Let's see his idea. And let's see my idea. So his idea was that a short position on USDCAD. And yeah, it didn't work out pretty well. And here's the, the analysis that he've made for. And then this is my analysis. And this is the analysis I've made for. And then this is my trade. So pretty much it. So 137 would be my main target. So you guys can keep a look on here. You can come to economic calendar as well. So it's really good. Okay, continuing from USDCAD. Yeah, so look, pretty much all my targets have been hit already. So probably this week or this Saturday, Sunday, I'm gonna have to do more economic projections and call a few friends on the bank side and see what they're looking for. But yeah, next week we're probably gonna have a few more targets. USD CHF, no. AUD USD already talked to, that I've mentioned for you guys. 0.62, yeah, good. Nzdusd and gold. Okay, so that would be my main thing for the US dollar. Let's talk about euro now. Okay, so the euro has been under pressure in the recent weeks. There's a lot of factors. I've mentioned for you guys a few of them last week, but including the still, people think that it's gone, but it's not. The war in Ukraine, it is impacting the European economy. It is. The lack of the hawkish action from the ECB, they are so much more tilted to the dovish side than the hawkish that they were previously. Okay. And the relative strength of the US dollar, of course, people don't want, long euro dollar at the moment. And then the risk of a recession in the Eurozone as well, as it presenting us lots of recession risks over there. And this is not good for Europe, of course. No country wants to be in a recession. Would you like to be in a recession? No one would like to be in a recession. All right. Despite the ECB hawkish rhetoric, investors they're still a bit concerned about the Eurozone outlook for what's going to happen next. And, the war in the Ukraine is disrupting the supply chains, and it's causing an energy prices to rise. And if we look at the Europe, it's one of the countries that most need the energy out of the supply. They don't produce the energy on house. They need the energy from somewhere else. Whether they get this energy from Russia. So yes, Ukraine-Russia war, it is disrupting these supply chains between Europe, Russia, and Europe, and so much other countries. And this is causing the energy prices to rise. And this is leading to higher inflation and then this lower economic growth in the Eurozone. And the US dollar, is also benefit from the risk of sentiment in the markets, because the investors are buying much more dollars as a safe haven asset. And this is putting much more pressure on the euro side, because they're taking the money off from Europe and putting the money in on US. So if we look at, it's pretty self-explanatory what is happening here, right? But anyways, the Eurozone is likely to remain bearish against stronger currencies, such as the US dollar, New Zealand dollar as well. New Zealand is performing pretty well. We're gonna get there in a few moments, in a few minutes. But it is doing pretty well, New Zealand dollar. Even as even as the central bank haven't had a much hawkish rhetoric past to MPC. Anyways, the Canadian dollar as well. Okay, so we're gonna get there as well. I would add that the euro dollar 105 level is a key support level. It was a key support level that we were looking to trade. And then now, let me just take it from here. We just broke, right, yesterday, this 105. Last week we had the touch, but we didn't break it, right? So it didn't count. It didn't count as like, oh, okay, maybe if we come back now and we can continue to short it. But now it is a confirmation that yes, we did have a breakout, very strong price move down. Where would I look to continue to short euro dollar? We're gonna get there in a minute. But anyways, now that we break this level, it could have sharp declines, right? It could have sharp declines, as I've mentioned. One would be a nice target. Okay. But keep in mind that you have, as an investor, as a trader, you have to monitor the upcoming US dollar releases if you want to trade euro dollar this week. If any signs of economic weakness from US, then if the data is weak, it could lead to further pullbacks on euro dollar. But if it continues to have weaker data on Europe, definitely we could have further selling pressures on the euro. Overall, yeah, guys, you already know how many times I have to mention that I've been bearish from euro since I've met you all. I guess it's like a month already. Anyways, let me grab a sip of my orange juice. Stay hydrated, guys. Any questions until now? We do have a question here. Let me check. This CAD losing its bullish momentum. You mean if sorry, Aditya, you mean if the Canadian dollar is turning more bearish now? Yep, okay. No, it's not. We're gonna get there. I'm gonna explain to you why. And my trade recommendations for, that's my personal take, but would be EURCAD short. That would be a good trade. Even probably gonna place, you guys don't need to take this trade, but I'm gonna place a trade here on live with you all. But you don't have to place the trade. This is my trade, okay? I was waiting for this level here. Let me just check because I've noted down where is here. That's the level 43.49. Just a moment. 43.49. 43.49, and then take profits on 43. That should do. Okay. And then yes, that's a nice consolidation. If I would like to trade on a short side on EURCAD, definitely it would be very interesting. Okay. What else? Oh yeah, and the target for EURCAD would be 140. That's JP Morgan. Oh, who I was talking to? It was, I can't say the name. It was yeah, I think it was him. So that's from Goldman Sachs, guys. That's 140 Goldman Sachs target, all right, for EURCAD. Very nice target. Anyways, so next we have the pound. Oh yeah, and EURCAD, euro dollar, euro CHF. Not too keen to trade euro CHF, but yeah, if you prefer, if you like to trade crosses, that would be a good trade as well. And that would be it, EURCAD and euro dollar for this week. Next, the pound, GBPUSD. Okay, so the pound has been under pressure as well in the last couple of weeks. There's a lot of factors. There's a lot of factors. The first one is the relative strength of the US dollar as well. The risk of a recession on the UK, as well the Bank of England hesitation to raise the interest rates. It was so funny because everyone was expecting the rates, even I. I'm not, like I already mentioned this so many times. You guys, those who are with me a few times know. I'm not a superhuman. I do get things wrong. Even I was expecting to the Bank of England, to raise the rate, but they came in and said, "Nah, we're not gonna do it." I was like, "Wow, okay, so you're not gonna do it? Why?" And then I was like, calling a few dudes, why they did this? Why are they doing this? They should raise. They're like, "Nah, mate, it's pretty clear. They can't raise because if they raise, they enter into an aspiral mode of the economy. That means that they go downhill even more." So I guess they're right. If they raise, then it's going to be a problem. And I don't know if investors would like to put the money there, because if they raise, they have a higher chance to get into recession then, to have a credit crunch in the future. So it's most probably that they won't raise anymore. That most probably that is the peak of the rate already. And if I'm right, then GBP will continue to go lower and lower and lower against the US dollar, because US dollar still have another hike to do. The Fed still have another hike, and they've mentioned that they will still have another one hike this year. And the market already cut it, the price, cut a 50 basis point from this year to next year. So the market was expecting the Fed to reduce those interest rates this year in 2023, up to December. But Jerome Powell say, "No, we're not going to do this. We're not saying that we're going to cut." And then the market was like, "Oh, okay. So if he say that, if he's not going to cut, then we postpone this cut for next year, for those cuts for next year." So then this year there's another hike from the Fed. I don't think it's going to have two. I think one will do the job. So there's a big correlation between GBP USD to continue to go lower, and as well the fragile economic outlook for UK. Anyway, so the UK economy is facing a number of challenges, right? Including, as the ones I mentioned, the high inflation, the rising energy prices that I've mentioned for Europe as well, and the supply chain disruption because of the Ukraine war. And this all, combined, it's a recipe for, it's low the economy growth and have more unemployment, have a higher unemployment on the economy. The Bank of England has been reluctant, I would say, to raise the interest rates. That would be the right. Yeah, I think that would be the right word. I think they're more reluctant. If they don't need it, they won't do it. If they it's like the last card on his hand. Oh, ta-da, now we're gonna raise. Oh my God, what do we do now? So I guess we don't need to worry about that anytime sooner, because in my opinion, they won't raise anymore. But anyways, and before we move ahead, remember who was the guy that was like, "No, I'm going to raise 50 basis points. I'm going to raise 75 basis points. I'm going to raise another 50. I'm going to raise another 75. Who was that guy? It was UK. Now they are the little one. They're not, "Oh my God, no, we can't do that. We can't do that." Because why? Because they had inflation to 12%. Inflation was at 12%. There was raising interest rates like a crazy, like, "Oh yeah, press the button and that's it," And now the problem is coming. We used to say in Brazil, now the water, it's above your knees, so you have to keep moving. And they can't, because if they raise one more or two more, it's going to be a big problem in the future for them. Okay, so they are being very reluctant to raise interest rates aggressively. Even as the inflation has reached the 9% very couple of months ago, we had 11, 12, but then it comes down to 9% and it stays at 9%. Anyways, the boy was concerned about the impact of higher rates on the UK economy, and now they're paying the price, right? So there's a risk of recession on UK, and it's also weighing on the pound. Lots of investors are worried about the UK economy could head for recession, because it's sort of technical recession now, but heading to a recession pretty soon wouldn't be a surprise for me, to be honest. Which would lead, of course, to much more weakness on the UK pound. US dollar continue, the story is also benefiting from this risk-off sentiment on UK markets. Investors are buying US dollar against pound, so they're preferring US dollar against the pound, and this is putting much more further pressure on the pound. The pound is likely to remain bearish against other stronger currencies, such as the US dollar I've just mentioned, the New Zealand, and as well the Canadian dollar. So yeah, I do believe, Robbie, sorry, not Robbie, sorry, Robbie, I do believe, Aditya, that we continue to have further strength on the bullish side of the Canadian dollar, not that we are losing strength. I'm going to get there in a minute. Anyway, so I would add that the pound, 122, 123 would be a very strong resistance, but we are so far away, right, that it doesn't even change. So now the levels I'm looking at would be, again, somewhere around here that I've just mentioned for you guys, and then we continue to go down. All right, but yeah, that would be it for me on the pound side. Not surprises, not out of anything out of the word that I've been saying already. I do believe the pound will remain bearish in the near term. So GBPUSD bearish, 118 would be the target. GBPCAD, where is GBPCAD? Here. GBPCAD, we are sort of consolidating again. I'm not too sure about this consolidation, but I'm more willing to go for this one. So if we get a pullback somewhere around here, right, somewhere around those levels, then that would be good, and we continue to go down around here, okay? And then GBPNZD as well. Where's my GBPNZD? It should be here. Why is not here? Okay, there we go. All right, that's a nice level. Just I would pay attention on this level and see how it reacts, but yeah, so GBPNZD would continue to this bearish trend. Okay, that would be it for GBPUSD, GBPCAD, and GBPNZD. Now let's talk about the pound, and then we talk about the Canadian dollar. Sorry, let's talk about Japanese yen, and we talk about the Canadian dollar. So let's go for USDJPY. I've mentioned already what I think about USDJPY, but yeah, let's go. Okay, so the yen has been, it's not a surprise, I guess, for anyone that have been on my seminars for quite a bit. The yen has been the worst, if not the worst, one of the worst performing currencies in the world this year. That's pretty heavy what I'm saying. It's like, oh my God. Yes, it is one of, if it's not the worst currency performing on the year. I'm not gonna do this now because it would take me a bit of time, but I can just go around all the emerging currencies and do the measurements and tell you guys next week. I'm pretty sure it is the worst currency this year. It lost more than 20% against the US dollar this year only. All right, so if we put on the daily chart, you can see all the way from here. Somewhere here. 17 to 20%. Yeah. 17%. Okay. So and the yen has been under pressure due to a number of factors. First of all, and it's the most I would say worrying about would be the BOJ, the Bank of Japan, dovish monetary policy stance that they have been. Sorry, let me sip my juice here. It has been one of the most dovish, and will continue to be one of the most dovish banks out there. The relative strength of the US dollar, again, the risk of a recession on Japan, and the widening interest rates differential between the Japan and the US. All right. So we have a negative interest rates in Japan, and we have a very hawkish Fed rhetoric on a very hawkish pace on a very good rate for US dollar. So it will continue to grind slowly up, right? So I guess we can continue to see this big boy continuation to up. So 150 would be my target again, but after that, I don't have a clue. I'm going to be honest with you all. I don't have a clue what it could happen. They're saying about bank intervention, blah blah blah. I'm not keen to do that, to be honest. I don't think the board will intervene as they did last year. Okay. Does anyone know what it's an intervention and how does the intervention works? I can then quickly explain this. Just let me know on the chat, guys. So the board has been reluctant to raise the interest rates, and the bonds, it's minus 10% rate at the moment. Even as inflation has reached the 20-year high at the moment, the board is concerned about the impact of the high interest rates on the already weak Japanese economy. So they are very, very stepping on the eggs on what to do and when to do and what it will be the best moment to do that. So I don't think it will be anytime sooner. I think that they will need higher and higher inflation. So then they could, at least try to do a move towards the monetary policy, the interest rates. And this, the parity between one rate to another, it's even benefiting more the US dollar. Overall, I do believe the yen is likely to remain bearish in the next couple of weeks, especially, of course, against stronger currencies, such as the US dollar, the New Zealand dollar, and the Canadian dollar. Okay, so CHFJPY, so let's say USDGBP 150 would be my target. Nzdjpy, I guess we can continue to go up on here. If we look, we are having sort of a consolidation even on a daily time frame. We're having this huge consolidation here, but I guess we can probably, let me go for 1 hour, it's easier. Probably around, let me think, guys, probably around here. I don't know if we break this board or not. I'm not too sure. Maybe, yeah, maybe something like that. But definitely probably not gonna get here. It's too strong for the Canadian dollar. I'm just waiting for CAD to begin its strength. I already bought CAD, as you guys could see on my EURCAD position. That can run, that can go up, but I still short an EURCAD. But anyways, as CHFJPY, I was just, where is CHFJPY now? Here. So I do believe, oh god, not CHFJPY. Oh yeah, CHFJPY here. Yeah, I do believe that we can go somewhere around here, and then we can continue to go up. That would be my second trade. So USDJPY 150, CHFJPY here, continuation of an uptrend, and then the New Zealand JPY here. Okay. So yeah, I continue to believe on a bearish Japanese yen. Now let's talk about the CAD. As I'm not gonna get the wrong name again. I don't know why I was looking at the chat. I thought it was Robbie, but it's not. It's Aditya. All right. So those CAD is losing its bullish momentum. The Canadian dollar has been relatively strong in the recent weeks, and this is why. There's a few factors why it is. Let me put on USDCAD here. There we go. So first of all, oil prices. Second, the Bank of Canada hawkish monetary policy statement. And third, the relative strength of the Canadian economy, right? So if those three factors continue to have a bullish outlooks, so if the higher oil prices continue to go higher and higher, there are a few people predicting another 20% rise. I don't know. I'm not a commodity trader, but anyways, it can happen. Could happen. I don't know. Right? Bank of Canada hawkish monetary policy stance. Yes, I think they will continue to have a hawkish stance. They will have another hike probably, and the relative strength of the Canadian economy. Right. So if we look at most of the CAD quotes currency like GBPCAD have been on a downtrend, right? So EURCAD have been on a downtrend as well. If we look, EURCAD have been on a downtrend as well. If we look, USDCAD is the only one that it's going up. Why? Because USD is the top performing currency at the moment. So I don't think it will, go down here. But GBPCAD, probably we can, see a retracement on the areas I've mentioned and probably can continue to go down. Anyway, so the oil prices have been rising in the recent weeks, as you guys probably know. Saudi Arabia have cut the production of 1 million barrels per day. That means that the supply keeps strong and the demand continues strong and the supply will be reduced. So the price will, of course, rise. And this is benefiting the Canadian dollar. For you, if you don't know, the Canada is a major export of oil. So higher oil prices lead to higher export earnings to economic growth. So if one country sells oil like Canada, then higher oil prices will benefit this business, right? Because people can't stand without oil, because oil is to make gas. So it can make petroleum, it can make the cars running, it can make airplanes. Let's just stop for a second and imagine with me if all the flights around the globe, all the airplanes around the globe has no has no gas to run. What would happen with the globe? It will stop, right? Because who will send those packages around Australia to China, China to Australia? Who will send those packages for south of one country to north to another country, or even widely globally? Who will do that? Those guys are the airplanes. They are the ones that do this. So imagine them without fuel. Imagine those ships on the ocean without fuel, how they would get A to B. Imagine you working on bike because the metro doesn't work on petroleum anymore. But anyways, without your car, life would be much harder for you. So petroleum, gas, oil is one of the things that the humanity can't live without anymore. And doesn't matter, we pay the price. We pay the price. It can be $1,000 for 1 liter. We will pay the price, right? So Canada is benefiting from these higher oil prices, and this is leading to higher exporting earnings for them. Anyways, and this is leading to high economic growth. Last week we saw the GDP of Canadian month over month, and it improved slightly. However, the 0% growth is still nothing to celebrate. We can't cheer about that because they're still on zero. Anyways, the Bank of Canada has been raising interest rates aggressively in an effort to combat inflation. And this is making the Canadian dollar more attractive to investors. The Bank of Canada has also been signaling the intention to potentially raise once more that I've just mentioned for you guys. off the back of a stronger inflation prints and retail sales figures last month. So I do believe that can raise another 25 basis points, let's say. Overall, the Canadian economy is also performing relatively well, despite the challenges facing the global economy. The Canadian unemployment rate is quite low, and an economic growth is expected to remain positive in the near term. I do believe that the CAD is likely to remain strong against most currencies in the near term, and that investors should also be aware of a potential for risk-off reversal in the markets. If risk appetite were to weaken, it could lead to a decline in the Canadian dollar. So that would be my only thought, right? There's a few other things that we should consider. That would be the Canadian housing market. It's facing some challenges now. And the Canadian dollar is a commodity-linked currency, so it could be affected by a decline in commodity prices. That we know that the gold price is going down heavily, right? So that would be my takes. I do continue to be bullish on the Canadian dollar, and I've mentioned already GBPCAD, EURCAD, and USDCad. Okay. Now let's talk about CHF, AUD, and then NZD. Did I answer your question, Aditya? That was good. You still have anything? Okay, no worries. That's my pleasure. Right. Let's go for CHF. Let's just say here. Yeah. Right. USD CHF. Is this big boy losing his strength? Well, it's been under pressure in the recent weeks. There's a few factors that it's leading to it. So there's the lower inflation on Switzerland. There's a pause on interest rates by the SNB. The strength of the US dollar as well. And the Swiss National Bank has been raising interest rates aggressively in an effort to combat inflation, right? However, the inflation on Switzerland has started to come down in recent months, as I've just mentioned for you guys. And this has led to speculative that the SNB may pause its rate cycle again. Okay. The strength of the US dollar has weighed on the franc and the franc Swiss. And this is because the Swiss franc is seen as a safe haven currency, but the US dollar is also seen as a safe haven currency with a better yield at the moment. So whether investors are looking at now, US dollar or CHF, of course they're looking to US dollar because the yield there is much better than CHF. And this is why we can see USD CHF just skyrocketing since July, right? Anyway, so overall, I do believe the franc is likely to remain under pressure in the near term. However, I'm also patient with the franc, okay? Because I do believe the franc Swiss could rebound only if the dollar, the US dollar weaken, or if there is a significant downturn in the US economy. So overall, I do believe the franc is a currency to watch in the coming weeks. So pay attention on that. However, I guess you have to be patient if you want to trade the CHF, because it may have some moves to one side and then to another side and maybe consolidation. But yeah, just be patient on CHF. Okay. Any trades on USD CHF? Not quite sure. I don't have any trades on CHF, so I don't want to mention for you guys anything just to mention. Yeah, I wouldn't trade. I won't trade. That's my personal take. Okay. Now let's talk about AUD and NZD, both of the currencies, and then we finish. I know there's more than 1 hour already. So First of all, Australia dollar has been, did someone send a message? They did. Steve, hi Luca, is the Chinese economy in trouble? Would these affect the price of iron ore exports from Australia? That's a nice question, Steve. Very good. I'm going to answer in a second. Let me just put it here. Okay. So AUD and NZD now, and then I'll answer your question, Steve. So the Australian dollar has been under pressure in the recent weeks due to a few factors as well. The first one is the slowdown in Chinese economy, already answering your question, Steve, and the risk of sentiment in the markets as well, the strength of the US dollar and the lower prices of the commodities. So kind of answering your question, Steve, the China economy, it is in trouble. And yes, it will affect the price of iron ore exports for Australia, from Australia. Okay. Remember, I've just mentioned for you guys about the Canada exporting oil. So that would be exactly the same idea for Australia exporting iron ore for China. Okay. The Chinese economy is a major trading partner of Australia, and if you guys haven't knew about that, so the slowdown in the Chinese economy is weighing on the Australian dollar 100%. There's like a kind of risk of sentiment in the markets, also weighing on the Australian dollar. But overall, the investors are selling the risky assets, so such as the Australian dollar, New Zealand dollar, and Japanese yen, and they are buying the safer assets like the US dollar. So kind of right now, everything is leading up to US dollar. Overall, I do prefer to remain neutral on the Australian dollar. However, there are some factors that could, support Australian dollar bearish on the coming months. So we had the RBA just today. If you haven't watched my video yet, it's going to be, I'm going to send the link in a minute. But we did have a pause from RBA, and they are predicting that inflation the rates continue to have these high instances, but they don't say that they will hike, and they don't say they will cut, but they say that if needed, they will hike. So pretty interesting situation, to a neutral, to bearish, to hawkish instead. So I would step off. The only one I would trade would be AUDUSD on the short side for me. Where is it now? Here. That's my target, 0.62. Okay, so that would be it. Did I answer your question as well, Steve? Okay. As we wait. All right. Yes, cool. That's good. Right. Last one, New Zealand dollar. Okay. The New Zealand dollar has seen a return of strength. If we look at Nzdjpy, let's say, he has seen a bit of a return of strength in the couple months, right? Especially if we look AUDNZD, let's have a look on that. AUDNZD. Here, we can see that the New Zealand dollar, it is strengthening against the Australian dollar, right? So this is due because there's a better GDP, because there's a higher returns on linked commodities and the rising price across the board, like the milk, like soy prices and so on, where New Zealand is a bigger producer. Is being the first central bank to pause the rates. So it is kind of bearish, I know, but it is a very rhetoric hawkish rhetoric. So interesting there. But in overall, you know, it's important to keep in mind that the Reserve Bank of New Zealand has stated that they remain open to further hikes. Yes, they did pause on the last meeting, but they're widely open for further hikes if positive inflationary data remains in the market. So that means that basically the New Zealand dollar could be volatile in the near term, right? Ups and downs. So the NZD is best traded against diverging currencies. So like AUDNZD would be my best take on the short side. Okay. So that would be it. And then Nzdjpy that I've just mentioned for you guys already. But that would be it for me, guys. I don't have anything more. Would you guys have any questions, or we can finish now? No? No questions? Gold? Gold again. Again, I've mentioned about gold already. We're gonna continue to go down. I actually had a short position here, but I didn't left it open. I don't know why, because I was a bit down. But anyways, gold, yes. I don't trade commodities. I think I think you asked me the question about gold last week, wasn't you? Last week or 2 weeks ago? Just confirm for me, because I've mentioned for you guys that we may have, I think it was somewhere on here, then I say like, yeah, we may have a downtrend initiating because Australian and China and New Zealand is this and that. So yeah, I guess we continue to go down on 108 probably somewhere here. And Eurjpy. Okay, cool. All right, guys. So that's it for me today, and I see you on the next week. Have a nice evening. You too, Lawrence. Anything, just hit us up. And give us a thumbs up on YouTube channel and subscribe to our YouTube channel as well, guys. And I see you on the next week.